Yeah, good evening. Am I audible to you? Is it audible?
Yes, sir.
Yeah, thank you. Thank you. Yeah, we will begin with the preparation of company accounts, that is preparation of financial statements or whatever you call it as. So the P&L account is the main part. The profit and loss account is the main part. And of course, balance sheet is going to be the next part. Okay. Now, the P&L account is going to be a statement format, not a trading P&L account like non-company form. Okay. So this must be presented by all the companies. This is a format that is given. Okay, in your Companies Act, all the companies are expected to follow. Of course, banking, electricity, insurance companies have their own different format. Okay, so what is the first one? Revenue from operation. This includes all the things which are connected to your main activity. For example, cash sales, credit sales, government subsidy received. Okay, sale of byproducts, sale of joint products, anything that is connected to your main business activity, we call it as which one? Revenue from operations. Any other income, this we call it as non-operating income. Non-operating income, which may be interest received, dividend received, rent received, profit on sale of assets, like that. That shall be other incomes. So you get total of income. Then you will do cost of goods sold. Instead of this, you can take this as cost of goods sold. Opening stock of raw material or purchased goods. Okay, plus purchases minus closing stock, like that. You can take which one? Cost of goods sold. Okay. Then employee benefit expense is nothing but anything that is paid to the employee. It can be salary, it can be perquisite, it can be a non-monetary benefit, or it can be a monetary benefit, bonus, commission, even ESOP, that perquisite you would have seen in salary income. Everything, whatever is paid to the employees. Okay, it includes retirement benefits also, like contribution for PF, contribution for gratuity, encashment of leave salary, everything. Whatever you are paying for employee benefit, that is called as what? Employee benefit expenses. Then finance cost is nothing but interest. Interest on different types of loans. Interest on different types of loans, which can be bank OD, which can be a debenture or a bank loan or a term loan, all types of interest, we call it as which one? Finance cost. Depreciation is the word that is used for tangible assets. Amortization is used for intangible asset. So all types of depreciations on building, plant, okay, furniture, those things, okay. Amortization includes preliminary expenses written off, goodwill written off, all these things, okay. Then any other expenses. Simple, anything that is not coming in the main 4 or 5 category, that will come in other expenses. Example, rent paid, printing and stationery, advertisement, loss on sale of assets, okay, discount allowed, commission paid. You commission paid to other than employees, clear? So anything that is not coming in the main hits, it will come like income from other source, okay? So it's like expenses, other expenses, okay? Other expenses. So total of income minus total of expenses, you will get profit before tax. You will get profit before tax. Okay. These things are only for the purpose of practical reporting. If there is any extraordinary item, like loss by earthquake, okay, or disaster by fire accidents, all those things are reported as which one? Extraordinary items. Then you get profit before tax minus current tax and deferred tax. There's nothing but provision for tax. It will give us profit after tax. Okay, this one is only for practical reporting purpose. You can ignore for the purpose of examination point of view. Then earnings per share should be disclosed in the P&L account. Earnings per share should be disclosed in the P&L account. So once again, 2 minutes. Okay, income minus expenses gives us profit before tax. Less provision for tax will give us profit after tax. Thereafter, you have to work out EPS, earnings per share, you have to work out. The same concept that you learned in financial management. Thereafter, one more thing, this can be shown in the balance sheet or as, a footnote to final accounts, that is P&L account. Appropriations. Appropriation means if there is a profit, if the directors want, this will be done. Number one, there should be a profit. Number two, if the directors want, this appropriations will be done. Appropriations may be interim dividend. What is interim dividend? Dividend paid before the conclusion of general body meeting. Then proposed dividend or interim dividend is the dividend which is paid before the end of the financial year. It can be middle of the year, beginning of the year, or after 9 months, like that. Proposed dividend. What is proposed dividend? The directors finalize accounts. They see there is a profit. Okay, and the profit can be used for no other purpose, which can be paid as a dividend. So they declare the dividend. This proposed dividend will be paid after the AGM. This will be paid after what? AGM. Corporate dividend taxes. Corporate dividend taxes. Okay, please remember there is an amendment. There is an amendment. Okay, corporate dividend taxes in the regular class, especially for Bharadwaj students, I said 15% of dividend distributed. 15% of dividend distributed. Okay, corporate dividend taxes, take it only when it is given in the problem. In the examination problem, if the examination problem is silent, please ignore corporate dividend tax. The examination problem says, provide for 10% CDT, you provide for 10% CDT. Okay, so corporate dividend tax is nothing but tax on dividend distributed payable by the company. Okay, could have known the dividend is exempted from the shareholder's hand. Why? Because the company is paying corporate dividend tax. So corporate dividend taxes, please take it only when it is given in the problem. Then transfer to reserves. Transfer to reserve can be general reserve, sinking fund, contingency fund, any fund. Okay, then balance carry forward to balance sheet. Balance carry forward to balance sheet. It will be shown under reserves and surplus. Okay, so interim dividend is what is already paid. Proposed dividend we are going to pay. Corporate dividend tax only when it is specified in the problem. Please apply this. Then transfer to reserves like general reserve, P&L account. Then balance carried forward to balance sheet. Then this is the most important thing. This can be tested for 4 marks, 5 marks separately. Minimum transfer to reserves. Okay, this is called as divisible profit and reserves. Depending upon dividend proposed, or you can say dividend on equity share capital proposed, then a percentage of net profit should be transferred general reserve, to be transferred to general reserve. Up to 10%. When the company is declaring 10%, nothing need to be transferred. Please remember, it is only a minimum amount. If the company wants, they can transfer voluntarily. This percentages are only minimum amounts. Okay. The company is declaring 8%. As per law, you need not transfer anything. But if the company wants, they can transfer. They can transfer 10 to 12.5%. 10 to 12.5%. That is above 10 up to 12.5%. Better to classify. Above 10 up to 12.5%. You have to transfer 2.5%. 2.5% of net profit should be transferred to general reserve. Then above 12.5% and up to 15%, you have to transfer 5% of net profit to general reserve. Then above 15% and up to 20%, you have to transfer 7.5%. Then if the dividend declared is above 20%, this can be 21% or whatever, if it is transferred, you have to transfer 10% of profit to general reserve. It's a most important question. Okay, this can be tested for MCQ or as part of final accounts, they can test it. Okay, so this is about preparation of P&L account and appropriations of profit. And this is a minimum transfer to be made for reserves. Then of course, balance sheet format. Okay, I need not tell you, you know the format of balance sheet already. Okay, it is classified into, the first heading is equity and liabilities. Equity and liabilities is the first heading, under which we have got shareholders funds. This includes share capital, reserves, and money received against share warrants. If you issue share warrant and collect money, that will be separately shown. Then any application money pending allotment. Any non-current liability, which can be a borrowing or deferred tax liability or any other long-term liability or provisions. For example, provision for retirement benefits, gratuity, etc. will come here. Then current liabilities include short-term borrowing like bank OD, short-term loans. Trade payable is nothing but creditors and bills payable. Any other current liability like outstanding expenses, all those things. Short-term provisions include provisions made for short-term obligation, which may be for tax or which may be for dividend. Then assets is classified into fixed assets. That is further classified into tangible, intangible. Fixed assets under construction, we call it as capital work in progress. Fixed assets under construction, we call it as capital work in progress. Then intangible assets under development also. Any long-term investments made will come here. If there is a deferred tax asset, this you will be learning at final level, not relevant for intermediate level, leave it. Because if I have to explain what is DTA, DTL, it will take about 2 hours, okay, which is not required for examination. Okay, knowledge matters, but examination-oriented knowledge much more matters for passing the examination. Okay, so long-term loans and advances given by the company. This is given by the company. Any other long-term assets like assets held under lease, all those things. Short-term investments, stock, inventories, debtors and bills receivable, cash and cash equivalent. Cash and cash equivalent. I'll discuss about cash and cash equivalent when we go to cash flow statement. How an item will be classified as cash and cash equivalent, we'll discuss in depth. Okay. So then any short-term loans and advances given. This can be advance tax or salary advances given, all those things. Any other current asset, which may be like prepaid expenses, accrued incomes. Prepaid expenses and accrued incomes. This is a format of balance sheet, which you note already. Just I had run through. Now, for the purpose of accounts, the type 1 question will be, this is for 6 marks in the exam. This is for 6 marks in the exam. The question is, what is the profit after tax? What is the EPS? What is the EPS? What is the proposed dividend? Then how much is transferred to general reserve? These are the questions. Okay, first let me give the question, then let me give the problem. You need not copy because it's going to come to you, of course, in your group. Then how much transferred to general reserve? What is the balance carry forward to balance sheet? Morning working, I will share. 6 marks. This is a question. Okay, I'll give you. Balances on 31st March 2020. 12% preference share capital. 20 lakhs. Equity share capital, rupees 10 each. 30 lakhs. Interim dividend paid. This is given from the trial balance, 2 lakhs. This is the balances on this date. Then we have got 9% debentures. 9% debentures, 40 lakhs. 9% debentures, 40 lakhs. Okay. So these are the things which are there as per your trial balance. As per your trial balance. Then the company earned EBIT rupees 25 lakhs. Company earned EBIT rupees 25 lakhs. Tax rate 30%. TDS, dividend distribution tax or corporate dividend tax, it is given as 12%. Corporate dividend tax 12%. The company proposed 20% dividend on equity. Okay. Now, what is the profit after tax? What is EPS? What is the proposed dividend? How much will be transferred to general reserve? And what is the balance carry forward to balance sheet? These are the main questions that can be tested for 6 marks in the exam. Okay. Where you have to do the rough working and calculate all these things. What is EBIT? What is EBIT? 25 lakhs. Less interest. Interest on debentures. 40 lakhs into 9%. 3,60,000. Okay, this will give us EBT. What is EBT? less tax at the rate of 30%. Provision for tax at the rate of 30%. This will be this into 0.3. It will give us earnings after tax. It will give us earnings after tax. Then we have to work out EPS, earnings per share, net profit minus dividend on preference shares divided by number of equity shares. Net profit minus dividend on preference shares divided by number of equity shares. When you apply this, what is the net profit? What is the net profit? 14,98,000 minus dividend on preference shares. 20 lakhs into 12%. 2,40,000. This divided by number of equity shares. 30 lakhs by 10, it will give 3 lakh shares. Preference dividend is nothing but preference share capital into the dividend paid. Preference share capital into 12%. 20 lakhs into 12%, 2,40,000. So 14,98,000 minus 2,40,000 divided by 3 lakhs. What is the EPS you are getting? 4.193. This is the earnings per share. This is a question. Okay, what is PAT we worked out? What is EPS we worked out? Then appropriations. Appropriations will include interim dividend paid. Already paid. How much is paid? Interim dividend paid? 2 lakhs. Number 2, proposed dividend. Can you pay for equity directly? Can you pay for equity directly? On preference share capital first. On preference share capital, that is 20 lakhs into 12%. 2,40,000. Then on equity share capital. On equity share capital, 30 lakhs into 15%. 20%. The 20% is given for equity. So it will give us 6 lakhs. So total proposed dividend is 8,40,000. Then they ask you to provide corporate dividend tax at the rate of 12%. Go with this. If this is not given, then please ignore corporate dividend tax. Since it is specified as 12%, we are taking at 12%. We are taking at what? 12%. So 12% of what? 8,40,000. This into 12%. Okay. Corporate dividend tax will be on the total dividend proposed. 8,40,000 into 12%. They have specified that percentage we have taken. Fourth one, transfer to general reserve. How much percentage? Transfer to general reserve, how much percentage? Any answer? 10%. This is where the institute twists and gives it. The company proposed a 20% dividend on equity. You look at up to 10% nil, up to 12.5%, above up to 15%. Look at this. Up to 20%, it is only 7.5%. This is particularly asked. This 20% is particularly asked to cheat the students. Because by memory mistake, 20%, 10% like that, you may take it. Only when it crosses 20%, then you have to transfer 10%. So transfer to general reserve will be 7.5% of net profit. That is 7.5% of net profit. 14,98,000 into 7.5%. Then balance carried forward to balance sheet. Balance carried forward to balance sheet will be, what is our profit after tax? 14,98,000 minus 2 lakhs minus this proposed dividend minus CDT minus transfer to general reserve. This much will be transferred to balance sheet. So net profit minus various amounts. This is transferred to balance sheet. So this kind of a question is most repeated in the past, but now since you're not going to do this on the screen, you will be working out in the paper, rough paper like this, and you will be typing or choosing the answer like PAT or EPS or proposed dividend, how much transfer to general reserve, and what is the balance carry forward to balance sheet. It's a short thing, but tests your knowledge like anything. The student should be able to work out EBT minus tax EAT, then EPS you should be able to work out. EPS you should be able to work out. Then appropriation, interim dividend paid. I will share the recording. If you have joined late, I will share the recording. Please go through. Okay, so proposed dividend on preference shares 2,40,000, on equity shares 6 lakhs, totally 8,40,000. Then corporate dividend tax will be paid at the rate of 12% of proposed dividend. Then transfer to general reserve will be, why 7.5%? Because the company has paid how much dividend? 20% dividend. 20% dividend, up to 20%, it is 7.5%. Then balance carry forward to balance sheet. Now, additional question also can be asked. Okay, where the proposed dividend will be shown in the balance sheet. They will give you options: shareholders funds, long-term provisions, other current liability, then short-term provision. Like this, they may give you options. Then you have to check the proper answer. It will be shown under what? Short-term provisions. This corporate dividend tax also will be shown under short-term provisions. Income tax also will be shown under short-term provisions. Transfer to general reserve will come under reserves and surplus. Like that, sometimes specific questions may be asked. Where are you going to show these items in the balance sheet, or under which head it will be shown? Like that, they may ask you some specific questions. Okay.
Sir,
Yes, please.
why will not tax the CDT on interim dividend, sir?
This is inclusive of CDT. Interim dividend paid would have been paid along with CDT. If you don't pay it, there is a violation of company law.
Thank you, sir.
Otherwise, they should have mentioned it separately. Otherwise, this interim dividend paid is inclusive of CDT, unless they mention in the problem. Okay, good. Next, we'll go for a comprehensive problem. Okay, come to this question number 13. If this is asked, it will be for 10 marks. They will ask you what is the total income, what is the total of expenses, what is the profit before tax. Then they will ask you what is the EPS, various other things they can ask you. Okay. Read the problem full, then we will solve. Identify different items where those things will come, then we'll work out. Where this machinery will come? Under fixed assets. Debtors opening balance will come, debtors closing balance will come in the current assets, trade receivable. Opening stock will be adjusted with cost of goods sold. Opening stock plus purchases minus goods, something like that. Salaries and contribution to PF will come as employees cost. This will come as employees cost. Bills receivable is part of trade receivable asset. Rent is other expenses. Investment, 60% we will take it in long term. Balance 40%, that is long term, will be non-current assets. 40% will be current asset. Copyright is an intangible asset. That will be coming under non-current asset. Tangible, intangible. Furniture, it will come under what? Furniture, it will come under non-current asset, fixed asset. Administrative expenses will come in other expenses. It will come in what? Other expenses. Advance income tax will come in balance sheet. Okay, this current year will come in the balance sheet. Last year income tax, that will be adjusted with the tax payable. We'll see. Then cash, it will come in cash and cash equivalent. Bank, it will come in cash and cash equivalent. Debenture interest paid will come in finance charges. Land will come under fixed assets. Loss on sale of fixed asset, it will come as what? Loss on sale of fixed asset, where that will come? Can you explain? It will come in other expenses. P&L account. It will come in what? Other expenses. Then advance to suppliers. Advance to suppliers. It is advance given to suppliers. It will be given from creditor. Loss on sale of fixed asset is not an exceptional item. Exceptional item is one which will not arise in the normal course of business. See, when you purchase and sell the assets, fixed assets also, you may not get the same price. The price may be either high or low. That's not an extraordinary item or exceptional item. Then share capital will be coming under shareholders funds. Creditors will come under current liability, trade payable. Sales, of course, operating income. Bills payable is also payables. Interest received, it will come in other income. General reserve will be reserves and surplus. PF payable will be shown under current liabilities. It will be shown under what? Current liabilities. Surplus means P&L account opening balance they have given. Provision for tax for the last year they have given. Then TDS for the current year is given, which means TDS made it to be deposited. That will be coming under current liability. 10% debenture will come under non-current liability. Bank OD will come under what? Bank OD will come under short-term borrowings. Provision for depreciation, this will be adjusted with asset value. We are given closing stock value. Depreciation 10% on cost of the fixed assets. This will come in P&L account. 1/10 we'll amortize it in P&L account. Income tax to be provided at 30%. This will be provision for tax. Dividend to be proposed to 10%. Dividend distribution tax, they have given 10%. They tell you 5% of the profit you transfer to general reserve. If this F is not given, how much you would have transferred? If F is not given, how much you would have transferred? Nothing, because up to 10%, nothing need to be transferred. Rent outstanding will be added with rent. Income tax for the last year assessed at 42,000. That is 4,200. 4,200. Look at last year, how much we provided? Provision for tax, 4,600 we provided. 4,600 provided, but we need to pay only 4,200. That's a surplus provision. Advance tax 4,000 is there. But we need to pay 4,200. So there is an outstanding amount of 200. This we will deal with this separately. Okay. So let us work out step by step. The 12th question is for your homework. Yeah, I am yet to provide answers for the issue of shares chapter. I will provide for the 12th question also. Revenue from operations. Nothing but sales. What is the revenue from operation? 2,04,000. Then other incomes. What will come in other incomes? Interest received. This interest received will come in other income. Interest received 4,000. Any other income like profit on sale of fixed asset, dividend received, commission received, all those things? No other income. So this goes as total of income. Then expenses. Cost of goods sold. Cost of goods sold will be opening stock plus purchases plus direct expenses like freight inwards, etc. Then minus closing stock. Okay. What is the amount? What is the opening stock? What is the opening stock given in the trial balance? 10,000 plus purchases. What is the purchases given? 98,000. Any direct expenses given in the problem like carriage inwards, duty on purchases, tax on purchases, commission on purchases, anything that is related to purchases given? No. Minus closing stock. What is the closing stock? That is given in the adjustment. 19,000. This will give us cost of goods sold. What is the cost of goods sold? How much? You work out and tell me. 89,000.
Sir, royalty should be treated as direct expense, sir.
Which one?
Royalty.
Yeah, royalty is direct expense. Then employee benefit expenses. Employee benefit expenses. This will include all the salary and other things. What and all will come in employee benefit expenses? Salary 23,000, contribution to PF. In paper and examination, you must do this as a working note. In online examination, we are not going to do this working note on the screen, so you can do like this: salary and PF contribution. How much? 9,000. Totally 32,000. No other thing. No outstanding salary, no allowance, no perquisite, no other thing. This PF payable is a liability. When something comes within the trial balance, okay, this has been already recorded. Journal entry would have been passed, like PF account data to PF payable. That will come in liability side. Then this is your employee benefit expenses. Finance cost. Finance cost is nothing but interest. Interest, check the debentures value. 10% debentures. We've got 10% debentures, which means 8,000 into 10%, 800 should have been paid. But if you look at, paid is only 600. Paid is only 600, which means outstanding amount is 200. That will come in the balance sheet. That will come in the balance sheet. So interest amount is how much? 8,000 into 10%, accrual basis, 800. Sir, what about that remaining 200? That will be shown as an outstanding expense, other current liability, like that. Then depreciation and amortization. Depreciation and amortization. Depreciation on fixed assets, machinery, 50,000 into 10%, on cost of the asset 10%, 5,000. Then what are the other assets? What are the other assets for depreciation purpose? Any other asset for depreciation purpose? Fixed asset? Don't depreciate land. Furniture. Furniture, how much? 13,000 into 10%, 1,300. Then amortization of which one? Copyright, right? Copyright. 18,000 into 1 by 9. They ask you to write off 1 by 9. Copyright 18,000 into 1 by 9. They ask you to write off. So how much it will be? 2,000. So total of all these things gives us 8,300. This is depreciation and amortization. Then what else? Other expenses. You name any other expenses that will come under other expenses. What and all will come in other expenses? What and all will come in other expenses? Here, let us go in the order. Rent, 18,000. Any outstanding rent given? Check that. Any outstanding rent given? No. Rent. Rent, outstanding rent is given. Okay, then rent plus outstanding rent. How much it will be total? Rent plus outstanding rent, 1,000. So it will be 19,000. Then what else will come? What else will come under other expenses? Loss on sale of fixed asset. How much? 400. Administration expenses. Administrative expenses 14,000. Administrative expenses 14,000. Any other expense? Any other expense? This is not a current year depreciation. Okay, this provision for depreciation is an opening balance. It's an opening balance, so that will be taken directly in the asset side. So we'll take up cost of the asset minus this provision for depreciation. Directly we'll take it. Any other expenses? Total 33,400. So this is the total of income and this will give us total of expenses. So this is a total of expenses. For want of space, I am continuing here. Profit before tax. Profit before tax is nothing but total of income minus total of expenses. 44,500 less tax, provision for tax, at the rate of 30%. At the rate of 30%. So this will be on this 30%. So you get profit after tax. Then we have to work out EPS. Earnings per share, net profit minus dividend on preference shares divided by number of equity shares. Okay. Net profit is known 31,150 minus, is there a preference share capital? Is there a preference share capital? No preference share capital. So 31,150 minus preference dividend is not there, divided by how many equity shares are there? 40,000, 10 each means 4,000 shares. So what is the EPS you are getting? Rupees 7.787. Okay, so they will ask this as a question. Okay, question number 1 maybe what is the total of income? Question number 2 maybe what is the total of expenses? Question number 3 maybe what is the profit after tax? And question number 4 maybe what is the EPS? And question number 5 maybe what is the balance carried to balance sheet, like that. Appropriations. What and all will come in appropriations? Proposed dividend. Proposed dividend, how much is proposed? Look at the adjustment, how much is proposed? 10%, 10%. So 40,000 into 10%, 4,000. Corporate dividend tax at the rate of 10%, which will be 400. 4,000 into 10%, 400. Then transfer to general reserve. Transfer to general reserve. They ask you to transfer 5% of profit. 5% of profit means 31,150 into 5%. 31,150 into 5%. You get 1,558. Okay, let us round off. 1,558 transfer to general reserve. Then, okay. Then if you look at, that's all. Okay. So this will give us no other appropriations. Balance carry forward to balance sheet. Balance carry forward to balance sheet is 31,150 minus 4,000 minus 400 minus, so 25,192. This will be added in the balance sheet under reserves and surplus. This will be added under reserves and surplus. So with this, the P&L account is over. With this, the P&L account is over. Next, we are going to do balance sheet. What is the date? 31st March 2017. Okay, the first title is called as equity and liabilities. And this is number 1, shareholders funds. Shareholders fund, share capital. What is the share capital? Equity share capital only is there, 40,000. Number 2, reserves and surplus. Lot of workings need to be done. What is the general reserve given already in the balance sheet? What is the general reserve already given in the balance sheet? Opening balance, general reserve, 15,000. Okay, 15,000 plus. What is the current year transfer? What is the current year transfer? 1,558 plus 1,558. So it will give us 16,558. General reserve. Okay, let me to sum up in the inner column and take it to the outer column. 16,558. This is general reserve. Then profit and loss account. Profit and loss account. profit and loss account. What is the opening balance? What is the opening balance of P&L accounts? It's given surplus balance on 1/4/2016, 5,000. Add balance carried to balance sheet. What is the balance carried to balance sheet? One minute. Sorry, yeah, 25,192 is the balance carried over to balance sheet. Then, most important adjustment, please look at. There is a provision for tax at the beginning of the year, 4,600. Okay. For last year, what is the provision for tax provided? Probably I'll work out separately. What is the provision for tax made for the last year? 4,600. But what is the tax payable for last year? That is given in the adjustment. That will be given in the adjustment. Income tax for the last year is only 4,200. Okay, there is a surplus provision in income tax. Okay, how much? 400. This surplus provision in income tax will be added here. Don't take this to P&L account because it is not a current year item. It's a last year item. Once again, I repeat, opening balance of provision for tax is 4,600. Tax payable for the last year is 4,200. There is a surplus provision of 400 that will be added with P&L account. Surplus provision for income tax. How much? 400. Any other thing that will come here? Any other thing? That CDT and all, it will come in. There is short-term provisions. So general reserve plus P&L account is this much. 47,150 is the total of reserves and surplus. Done. Then this is shareholders funds, share capital. This is not a second heading. Reserves and surplus is part of shareholders funds. Then number 2, application money pending allotment. Application money pending allotment is not given to us. Number 3, non-current liabilities. In that, long-term borrowings. Long-term borrowings, that debentures will come. 10% debentures will come. 10% debentures. How much? 8,000. 10% debentures, 8,000. Number 4, current liabilities. Under current liabilities, trade payables. Trade payable is nothing but creditors plus bills payable. Creditors and bills payable will come under other, that is trade payables. What is the creditors balance? 18,000. Creditors balance is 18,000. Bills payable is 33,000. So totally how much? Okay, 51,000. Then short-term provisions. That will come under provision for tax. Okay. Provision for tax of the current year. What is the provision for tax of the current year we created? Look at the P&L account. How much we created? Current year provision for tax. 13,350. 13,350. That is the current year provision for tax. Then proposed dividend. Proposed dividend 4,000. Corporate dividend tax. Corporate dividend tax 400. So total, all short-term provisions will come. What is the total of short-term provisions? This much. This is coming under Short-term. Advance to supplier, we have given the advance. So that will come under current asset. That will come under current asset. Other current liabilities. What and all will come in other current liabilities? Rent outstanding 2000. Then what else will come? What else will come in other current liabilities? Income tax payable. Okay, if you look at for last year, what is the payment made? Last year we made 4,000 of payment, but liability is 4,200. 4,200 is the liability minus 4,000 we have paid for last year. So balance 200 will come. Then what else will come? Interest on debentures. Out of 800, we have paid only 600. Look at the trial balance. So balance will be 200. Then what else will come? Anything else? Anything else? Yes, this PF payable, bank OD. PF payable, how much is the PF payable? 2,000. PF outstanding, that 2,000. Then what else will come? Bank OD will come under separate heading. That will come under short-term borrowings. Okay, yeah, correct. This is 200. That will come under short-term borrowings. What is a bank OD? What is a bank overdraft? 2,000. That will come under short-term borrowing. Then anything else? Anything else? Yes, TDS liability paid, it to be paid. TDS, it to be remitted. It to remit, how much? 400 is there. All these are payable in short term, that is other current liabilities. So this will give us 4,800. Is there a mistake I've done? Any other mistake I've done? What is a bank OD? 2,000. Any mistake in my working? Definitely that should be there. Rent outstanding, how much? 2,000. Income tax payable, 200. Income tax payable, 200. Income tax payable, 200. Interest on debentures outstanding, 200. PF payable, it is 1,000. Okay, rent outstanding is 1,000. Oh, sorry, yeah. Rent outstanding is 1,000. So total of liability side will give us this is amount. Then assets. Okay, number one, non-current asset. Under that, we have got tangible assets. Tangible assets. Okay. What are the things we have to take? Land plus building plus furniture. Land plus building plus furniture. What is the total? Let us add the cost. Plus machinery also. Add up what is the total cost? 50,000 machinery. Land 8,000, so 58,000. Furniture 13,000. No building, huh? Okay, add up and tell me. Only tangible. This is 71,000. Less provision for depreciation. Given in trial balance. What is the provision for depreciation given in the trial balance? 10,000. Less current year depreciation. Less current year depreciation we charged in P&L account. Only depreciation part, please. This machinery, okay, plus furniture. Copyright, don't take it here. That will be coming under separate heading. So this will give us the closing balance. 71,000 minus 10,000 minus 6,300. 54,700 is the balance. This is tangible asset. Intangible asset, that copyright 18,000 less amortization. How much? 2,000. So outer column 16,000 will come. That is for intangible assets. Then non-current investments. It is given 40% are short-term investments. So 60%. 60% would have been non-current investments. Okay, 40% short-term means 60% long-term, 15,000. So non-current asset we classify into tangible asset, intangible asset, then non-current investments we take. Then number 2, current assets. Under current assets, current investments. Current investments are 40%. Current investments are 40%, which will be 10,000. Trade receivable, debtors plus bills receivable. Debtors plus bills receivable. What is the debtors balance? What is it? 22,000. 22,000. Then where is the bills receivable? 14,000. 22,000 plus 14,000. How much it is? 36,000. That is 36,000. Then inventory, nothing but closing stock. What is the closing stock value? 10,000, right? Inventory is 10,000. Then cash and cash equivalents. That will be coming under separate heading. That is not a trade receivable. That is advance given will be coming under other current assets or short-term loans and advances. Cash and cash equivalents. Cash and bank balances. Cash and bank balances 13,000. 13,000. Then short-term loans and advances. Short-term loans and advances. What is the advance tax? What is the advance tax paid? What is the advance tax for the current year? No, advance tax for the current year. $5,000. Advance to suppliers. Advance to suppliers. How much has been given? 1,000. So totally 6,000. Then other current assets. Any other current asset like prepaid expenses outstanding. Prepaid expenses or accrued incomes? No. So add up, you get the total. Why there is a difference? If it is one item, we can understand. Which one? Okay, closing stock is 19,000. Okay. Done. 1,69,700. Good that you are correcting me, so you can easily write your exam and get the maximum mark. So this is about preparation of final accounts. This is about preparation of final accounts. Okay, like this you can practice some problems. You can practice some problems either from your study material, or you can see the practice test papers which are given for December 2019. It had one final accounts problem. See, you can practice this particular problem also. Okay, they've given a similar problem. They've given advance tax include for last year and current year is given. Transfer 5% of profit, 30% of represents short-term investments like that. So this is a kind of a question that is tested for about 12 marks. With solution it is there. Okay, so you can try this question at home. You can try this question at home. With solution it is given. Now for your homework, I request you to try this question at home. Try this question at home. Sir, so many information is given what to do. Add up all the opening stock, add up all the purchases, minus all the closing stock will give us cost of goods sold. Okay, add up opening stock plus add up purchases, okay, minus closing stock will give us cost of goods sold. If you find any direct expenses that can be added, like raw material, freight inwards on raw material and goods, transit values, all those things you can add it. These are all direct expenses, you can add it. So opening stock plus purchases, direct expenses is nothing but freight inwards on raw material, stock of goods and transit insurance also. This will give us cost of goods sold. Then bad debt will come in other expenses. Delivery expenses will come in other expenses. Salary will come in employees cost. Okay, salary to salesman will come in salary. Okay, employee benefits. Dividend will come in appropriation. Factory rent is given. It will come in other expenses. Sundry other expenses also. Repairs, all those things will come in other expenses. Contribution to PF will come in other expenses. Staff welfare expenses will come in employees cost. Okay, sorry. Contribution to PF and the staff welfare expenses will come in employees cost. Bonus will come in employees cost. Loss on sale of machine will come in other expenses. We are given rent is another expense. Okay, so sales revenue, other incomes are given. This will give us income from operation. Then other incomes like that it will come. All these interests will come as finance charges. All these interest will come as finance charges. Office rent will come in other expenses. Administration expenses will come in other expenses. Extraordinary losses will be deducted at the end. Dividend distribution tax paid will come in appropriation. Then all these details are given. So today or tomorrow, I'll be sharing 3 homework problems solution. One is this particular thing. Second is issue of shares. Sahil, please mute. Okay, I'll share the solution for issue of shares as well as for this final accounts. Then, one of the most important area while preparing final accounts is remuneration to managerial personnel. This can be tested for 1 mark or it can be tested for 4 marks also. Okay, in the examination, online examination, you can expect a short answer question based on remuneration to managerial personnel. Okay, this is not applicable to a private company. This is applicable only to a public company, listed or unlisted company, it is applicable. Okay, who is the managerial personnel? And what is the maximum remuneration payable? Number 1, a person who is titled as manager, normally general manager of the company, 5% of net profit. 5% of net profit. Number 2, the person who's a whole-time director or MD, where there is one such person, then you will pay 5% of net profit. Okay, same, whole-time director or managing director, where there is more than one such person. Like a company is having 2 whole-time directors or 2 managing directors, then 10% of net profit for all of them. Which means if the company is having 5 whole-time directors and 1 is managing director, 10% you can pay for everyone put together. 4th one, all part-time directors. That is, the company is not having whole-time director or managing director. 3% of net profit. Okay. There are part-time directors and the company is also having a whole-time director or managing director, then it is 1% of net profit. This is for the part-time directors. 1% of net profit you can pay. Overall, to point number 1 to point number 5, you can pay 11% of net profit. 11% of net profit. From point number 1 to point number 5, that is for all the people put together, you cannot pay more than 11% of net profit. Sir, what is the meaning of net profit? Net profit means take the net profit after appropriations. That's nothing but balance carried to balance sheet. Add back all appropriations. Appropriations means like dividend or corporate dividend tax, general reserve, all those things. Add back tax. The screen is proper from my end. There is no issue from my screen. Is there an issue from my screen? No issue, I hope. It's working proper. Net connectivity issue may be there. Just log out and log in, you will get it. Add back tax. Add back remuneration already charged in P&L account. Add back excess provisions or expenses. It can be provision for bad debts or provision for repair. Add any excess provision for expenses. Add excess depreciation. Okay, add back any capital expenditure debited to P&L account. Sir, why capital expenditure comes in P&L account? See, if an asset is acquired for scientific research, we can claim 100%. For income tax purpose, we can claim what? 100%. But for calculating managerial remuneration, that should be added back. That should be added back. Any voluntary compensation paid. Any voluntary compensation paid. For example, workman got injury. As per law, you have to pay 5 lakhs, but voluntarily you compensated 8 lakhs. Extra 3 lakhs will be added back. Extra 3 lakhs will be added back. Voluntary compensations paid. Add. What else? You have penalties for violation of law. Any law. It can be company law or any law. Clear? So this will give us net profit for managerial remuneration. The amendment is, okay, hope you joined the late. Corporate dividend tax should be provided only when it is specified in the problem. This is the thing. Corporate dividend tax will be provided only when it is specified in the problem. Okay, in the regular class, I taught you, take corporate dividend tax as 15% of net profit. Okay, but now, okay, only when it is specified in the problem, please do it. Because the company law has changed, our taxation rules have changed. So depending upon the exam problem, we can work out. If it is specified in the problem, do it, otherwise leave it. So once again, take the final net profit, add back all the appropriations if there is any, add back taxes, add back any remuneration already charged in P&L account, add back any excess provisions made for expenses, add back any excess depreciation or capital expenditure debited to P&L account, any voluntary compensation paid, penalties for violation of law. This will give us net profit for managerial remuneration. On this, depending upon the situation, you will apply 5% or 10% or 3% or 1%, and overall maximum cannot exceed what? 11%, like that. Depending upon the situation, you can try this. Yeah, cash flow statement. Wait. I do not know whether I'll be able to do today because there is a small fever, not corona. There is a fever because of so many classes. Like after your class, I take for other classes. So there's a small body pain and kind of a fever. So I'll continue cash flow statement tomorrow. Actually, I thought of canceling the class today, but still it is not fair to keep canceling. Yeah, profit on sale of fixed asset. Okay, one more thing. Yeah, most important thing, you have to eliminate capital profit on sale of fixed assets. What is the capital profit, sir? Selling price minus cost of the fixed asset. That should be eliminated. That should be eliminated. Okay. And you should also eliminate any other capital profit. Credited to P&L account. So I'd like to do two problems based on this. Once again, depending upon the managerial personnel, you pay the remuneration. And the profit should be reworked, and based on that, you have to pay the remuneration. Sir, how an examination problem can be tested? Okay. This is a simple problem. Then I will go for a complicated one. First, simple problem. Net profit after providing repairs 6 lakhs. Okay. Provision for repairs 5 lakhs. Actual expenses are 4 lakhs. Provision for bad debt 7 lakhs. Actual bad debt 5,50,000. The question is, calculate remuneration payable to managing director and part-time director. Okay. So simple. Net profit after providing for repairs is 6 lakhs. We will add back excess provision. What is excess provision? 1 lakh we will add back. Here also, excess provision for bad debts. Any excess provisions we'll add back. So this will give us excess provision. This is also excess provision. We will get net profit for managerial remuneration. This we will get which one? Net profit for managerial remuneration. I expect this particular question in the exam. This was a repeated one. Net profit for managerial remuneration is how much? 8 lakhs, right? Oh, sorry. Yeah, 1,50,000. So 8,50,000 is the net profit for managerial remuneration. So if the company is having MD, we can pay 5%. So this will be 8,50,000 into 5%. Okay. Part-time directors, the company is also having MD. So how much is payable? The company is not having MD or whole-time director, 3%. The company is also having MD or whole-time director. How much you can pay? 1% of net profit we can pay. So 8,50,000 into 1%. This into 1%. So it's a small problem. This can be tested for 4 marks in the exam. This is for remuneration calculation. Okay. So it's a small problem where we take net profit, we add back various items, then find out for MD 5%, for part-time directors 2%, like that. So this is example 1. You need not copy. This will come to you immediately after this class. I'm not getting your voice. There is a connectivity issue, I hope. Yes, Abhinav Karthik. There is a voice break.
So we have to take the excess.
Still. Yeah, please type the question if you are not able to. We are not able to hear. Not only me, others are also not able to hear. Okay, you type the question. I'll type the next problem. P&L account for the year ending 31st March 2020. This is also a past examination question for 8 marks. Okay, so by gross profit 25 lakhs by, yeah, excess provisions always you have to take. 1 minute. Excess provision. See, we charged this much, okay? But actual expenses are only 5,50,000. Whatever is excess expenses claimed in the P&L account, we'll add it back. Same like your PGBB chapter in income tax. Whatever is excess amount claimed, that you will add it back. By profit on sale of forfeited shares. $30,000 by profit on sale of asset. 1,50,000. Cost rupees 80,000. Cost rupees 2 lakhs. WDV 1 lakh. This is on the debit credit side. They will give you P&L account like this. To salary 4 lakhs. To rent 2 lakhs or 20,000. To compensation to workmen 1 lakh. To new laboratory 50,000. To depreciation 80,000. To transfer to reserve. Sir, how this will come? They will give you to confuse, that's all. Provision for tax. Provision for tax 90,000. To managerial remuneration. Already paid 80,000. To ex gratia. Paid to workers. 90,000. To provision for bad debts. 1 lakh. To net profit after appropriation. Total of credits minus debits. So 15,50,000. Okay, adjustment number 1. Actual bad debts 80,000. Allowable depreciation 65,000. Compensation includes voluntary compensation rupees 25,000. Okay, that's it. Calculate remuneration payable to number 1. If there is a manager and MD. If there is a manager, MD, full-time director, and a part-time director. Okay, so this is a question that can be tested for 8 marks. This is a question that can be tested for around 8 marks. So we'll start with the net profit after appropriations. What is the net profit after appropriations? 15,50,000. Add back excess provision. Let me to go from the end. Provision for bad debts. Excess provision for bad debts. What is excess provision? 20,000. Add ex gratia paid to workers. Sir, what is this ex gratia paid? It's a kind of a voluntary compensation. Simple, on a festival occasion or on a happy mood, the directors call for the employees and give a surprise bonus. It is not as per your employment agreement. Okay, the employer is announcing a surprise bonus. Okay, we have performed very well. Okay, so we have all worked even during the corona situation. Okay, we would like to appreciate your services. So for that 1 month salary, take it as bonus like that. So it's a kind of a voluntary bonus that is paid. Ex gratia paid to workers is a kind of a voluntary bonus that is paid. Voluntary compensation will be added back. Then add provision for tax. Provision for tax. Why? Because the director should be remunerated before providing for tax. Add managerial remuneration. Managerial remuneration already paid. Because we are going to work out managerial remuneration. So already paid will be added back. Already paid will be added back. Then add excess depreciation. Excess depreciation. 80,000 is there in the P&L account and you can find 65,000 is allowed. 15,000 will be added back. New laboratory. Why? It's a capital expenditure. This may be allowed for income tax purpose. For calculating remuneration, it should be added back. It should be added back 50,000. Then add compensation, voluntary compensation. Voluntary compensation to workmen. How much is paid? 25,000. Rent, salary and all operating expenses ignore. Rent, salary and all operating expenses please ignore. Then less profit on sale of forfeited shares. Actually, it should not come in the P&L account. Profit on sale of forfeited shares should go to capital reserve. That should not come to this one. How much? 30,000. Yeah, very good. Yeah, general reserve I ignored. Very good. Add back appropriations also. Add back transport reserve. Transfer to general reserve 70,000. Yeah. So profit on sale of forfeited shares minus 30,000. Then most important thing is the next one. Less capital profit on sale of fixed asset. Sir, what is a capital profit? Selling price less cost. Less cost. Sir, how to find out selling price? What is the WDV of the asset? What is the WDV of the asset? Check. What is the WDV of the asset? 1 lakh. 1 lakh. Okay. What is the profit on sale? Profit on sale is 1,50,000, which means you would have sold the asset for, 2,50,000. Return on value is 1,50,000. Sorry, return on value is how much? 1 lakh. Profit on sale is 1,50,000. Selling price is 2,50,000. What is the cost of the asset? 2 lakhs. This is called as capital profit on sale of fixed asset. How much? 50,000. So once again, WDV is 1 lakh. WDV is 1 lakh. And asset is sold for a profit of 1,50,000, which means selling price would have been 2,50,000. Selling price would have been 2,50,000 minus cost of the asset, capital profit on sale of fixed asset minus 50,000. So this will give us net profit for managerial remuneration. 19,55,000. This is the net profit for managerial remuneration. Case 1, for manager, there is a manager only. How much you have to pay? 50,000. There is a manager, 5%. This into 5%. Okay. Second, if you look at second case, manager 5%, MD 5%, whole-time director 5%, part-time director 1%. He had 5 plus 5 plus 5 plus 1. It will come to 16%. Second case, it will come to 16% if we add individually. But maximum we can pay only what? 11%. They should share the thing. That 11% they should share amongst themselves. So second case, 11% maximum. So this 19,10,000 into 11% we can pay maximum. Okay, so when they give you profit and loss account, take the net profit, add back all excess provisions and voluntary compensations, provision for tax, managerial remuneration and excess depreciation, any capital expenditure or voluntary compensation. There is no prescribed ratio for this. They have to decide among themselves. They transfer to general reserve. Probably they will share in the ratio which they are eligible. 5:5:5:1 ratio. Because for manager, 5%, for MD, 5%, for whole-time director, if it is there, 5%, and this one, part-time director is 1%. Probably they will share in 5:5:1 ratio. So this model problem also can be tested in exam. Laboratory also is a capital expenditure. If they tell you laboratory, cost of laboratory, that means it's a capital expenditure. Yes, this is for public limited companies only. Then I request you to go through what is the remuneration payable in case of loss-making companies. The company is under loss or the company is under a loss. Okay, you can go through your study material. There would have been given like effective capital and salary payable like that. Please go through that also. Sometimes it may be tested in MCQ. So in final accounts area, what is possible for examination point of view is, okay, one is this kind of a question. They ask you to work out P&L and P&L appropriation with balance carried forward to balance sheet. Second type of question is a comprehensive problem where you have to work out everything, and prepare the balance sheet. And third type of problem is finding out remuneration payable to the managerial personnel. They can ask you to work out this. Okay. So, or they can give a lengthy problem with P&L account, work out the remuneration payable like that, they may ask you. Okay, so cash flow statement, let me to continue tomorrow morning because totally unwell from my end. Even if I'm well, so I'll be making a lot of mistakes in typing and other things. So we will meet tomorrow morning. We will meet tomorrow morning. They cannot ask managerial remuneration with final accounts. They cannot ask managerial remuneration with final accounts. Yeah, I will share all the Excel working. Now, then go for a rest. Thank you, Nazar. Thank you, Saranya. Yeah, auditing, you will have more MCQs. Out of 50 marks, you will have 30 marks MCQs from auditing or 25 marks MCQs from auditing. Sure. Thank you. Thank you. Sure. We will continue tomorrow morning. And with, of course, the concepts of